Now we will prepare the provision for doubtful debts account. Okay, so let us write here the name first. Provision for doubtful debts account. Okay, great. Now let us have a look at the question once again. So at the end of the question, it is written that other recoverable debts were of $8,400 were written off at 31st August 2022. Okay, we recorded the remaining trade receivable of 31st August 2022 was $110,000, and ANTE decided to maintain the provision for doubtful debts at 5% of trade receivable. Okay, so now we need to calculate 5% on all the amounts of trade receivable. Okay, so here the provision for doubtful debts, it is a credit account. Okay, so the balance, the opening balance of this account will appear on the credit side first of all. Okay, so let us write here balance BD or opening balance, whatever you call, 2021 September 1st. Okay, we will write here balance VD. So you might be thinking, why 2021 September 1st? Okay, so we have here trade receivable on this day. So what is the amount? Amount was here $91,500. Yeah, so have a look at the question. The trade receivables at 31st August 2021 were $91,500, and ANTE decided to create a provision for doubtful debts of 5% on trade receivable. Okay, so on 31st August 2021, okay, so last day of the financial period. Okay, so opening balance will come on the first day of the financial period. Okay, which is 1st September 2021. Okay, so here our trade receivable was $91,500. Okay, so here $91,500, if we multiply by 5%, then we get $4,575. Okay, this is our opening balance. So let us write here 4,575. Okay, great. So here again on the question written, on 31st August 2022, the trade receivables were $110,000. Okay, so here we have one more amount of trade receivable, which is $110,000. So now we need to create provision for doubtful debts at a rate of 5% on this amount. Okay, so amount is here $110,000. So if we multiply $110,000 by 5%, we get $5,500. Very simple calculation. Okay, so this is the closing amount, $110,000. So provision for doubtful debts on this closing amount will be the closing balance. Okay, means balance CD, balance carried down. Okay, so we will write here this amount on the debit side as balance CD. Okay, so here we will write $5,500. Okay, good. So only these two amounts we had, and we created provision for doubtful debts. Now we will balance it. Okay, we will check how much amount will go to the income statement. Okay, so here we will write on the debit side the total, it is $5,500. Why on the debit side? We will total first, because this column, this debit column is here greater. Okay, so we will take this amount on the credit side, just transfer, and we will write $5,500. Okay, now if we subtract this amount from this total, we get here 925. Okay, this amount will appear in the income statement. Okay, so we will write here income statement. Okay, and the date for income statement will be here, the last day of the financial period, which is 2022 August 31st. Here also the closing date will be the last day of the financial period. So we will write here 2022 August 31st. Okay, so now what to do? We need to bring down the balance. Okay, it is a requirement on the question. So here we have balance CD on the debit side. So balance bring down, balance PD will come on the credit side. Okay, so let us write here on the credit side. We will write value the total. Okay, don't forget. We will write here balance BD. Okay, which amount will appear here? The amount is $5,500. Okay, so let us write here $5,500. Okay, and the date will be here the first day of next financial year. Okay, so here we are preparing this account for the year ended 31st August 2022. Okay, so new financial year will be started on 1st September 2022. Okay, so let us write here 2022 September 1st. Okay, so please don't forget balance PD will be below the total and balance CD will be above the total. Okay, so these all are linked up. If you want to practice this topic, you can check out my channel. You'll find some other videos.